Hello and welcome everyone to this latest weekly market recap. I'm Tom Bowley, Chief Market Strategist at EarningsBeats.com. It's a pleasure once again to be with all of you. Happy New Year from EarningsBeats and Stockcharts to all of you. It was a pretty good year in 2024, but hopefully we'll have another solid year in 2025. I will say though, December was crazy. I don't know if it was as crazy for all of you as it was for me, but it wasn't a good month for me. Everything that I was expecting to happen in December kind of flipped upside down. It went against most historical norms, as I'll be able to show you here in just a couple of minutes. But, when we look back to, where the market was and what was leading going into December and look at those historical trends and so forth, everything kind of got flipped upside down. So it was kind of an interesting I guess, look at the market, because when I do a seasonality report, a monthly seasonality report for our members at EarningsBeats, which I just sent out probably an hour or two ago this morning for the month of January. And I was looking at the results for December, and the S&P 500, I think, was down a couple percent, but the NASDAQ was actually flat. And yet 19 of the 20 seasonal stocks that we provided a month ago, stocks that historically have done very well in December, 19 of them were down. The average return on all 20 stocks was minus 8%, whereas, like I said, the NASDAQ was flat, S&P was down 2%. So it was our worst month of the year in terms of the seasonal. We give top 20 seasonal picks for each month of the year. It was by far the worst month. And when we look historically at what sectors tend to drive the market in December, it was pretty much everything was flipped upside down. We were seeing strength from areas we typically see weakness in December, and we were seeing weakness in December from areas that we normally see strength. Anyhow, we're going to move on from all that. It's 2025. Hopefully, we'll have a much better January that follows along, maybe a little bit more according to plan. But first, let's take a look at what happened here over the last week with our major indices. We did see the S&P 400 mid-cap, and I literally just updated this. This is in the middle of the trading day on Thursday. So I did just update this here just as of a couple minutes ago, and we had the mid-cap 400 mid-cap index down 0.85% over the last week. Russell 2000 down 1.13%. Then we had the transports, the Dow, S&P, and finally the NASDAQ, which closed the year down, or closed the last week of the year down 3.03%. Interesting fact here. I was looking back because, I follow a lot of history, and I've talked a lot about the Santa Claus rally. For me, it usually runs from the 21st to the 31st. That's when I look at it. That's when all of my research tells me that is the time when you want to really make sure you're in the market. I know a lot of others follow maybe the period from Christmas to New Year's, but I wanted to just mention that in 2024, we did something. We closed the year doing something that we had only done one time since 1950. It occurred in 1966. And that is that every day, every trading day from Christmas through New Year's was down. Every one of them was down to close out 2024. The only other time that's happened since 1950 was in 1966. And the losses that we saw in the final week were higher than we saw in 1966. So this was the worst Santa Claus rally. There was no rally, by the way, but this was the worst period of that December 25th to January 1st. That was the worst period that we've seen in 75 years in 2024 to close out. So really, I guess, I don't know, maybe it was that final bang that says, hey, December 2024 wasn't like anything else that we were accustomed to. Anyway, I just wanted to point that out. I thought it was an interesting fact. And so we're starting off January 2025 now. The S&P 500 tends to do pretty well. The NASDAQ tends to do much better. Actually, January, since 1971, January is the best calendar month for the NASDAQ, over these past, 53 years or so. So we do have a lot of history that supports strength during the month of January. And there's also this thing, I call it the January effect. But as goes January, so goes the balance of the year. I'm a believer in that. I've got a lot of facts to back that up, historical facts. And so I am very interested to see how the market trades in the month of January. Anyhow, let's move on and take a look at the sectors. So again, this is over the course of the last week. Consumer discretionary. Oh, wait a second. I got this one on the month because I was going to say discretionary did not lead last week. Let me just do a week here. So here's the last week. So energy is the only sector that has been up over the course of the last week. Utilities are basically flat, but you go all the way down here and you'll see consumer discretionary, technology, and industrials finishing off the last week very, very poorly. And again, you can see the damage that was done within this last week. This Santa Claus rally never really appeared, never showed up. And so it again caught me by surprise, probably caught a lot of traders by surprise that we're expecting what we normally see, but again, wasn't in the cards. If I do stretch this out to a month, though, in the month of December, what I wanted to point out is real estate tends to be the best performing sector in the month of December. And that goes back, even if we just look at the secular bull market, going back starting in 2013, real estate has been the December leader over the last 12 years. Now, normally when you think of secular bull market, you think about all those Mag 7 stocks, you think about the aggressive sectors. December's different. December usually is normally favors more dividend payers, more value-oriented stocks. And so again, real estate down here, utilities is normally the second best month, dropping 5%. Real estate over the last month dropping almost 8%, more than 7.5%. So if you want to know why those top 20 performers in December didn't do well, it's because the areas of the market that tend to lead were flipped. Everything was flipped for December 2024. Now, is that going to have any long-term impact on the market? I don't know. It's hard to even go back and talk about. I think in 1966, last time it happened, 1967, the market, the S&P 500 was up 20%. So it didn't have any bearish impact on the following year the last time this happened. So I don't know that there's enough of a sample size to even address it. I'll be looking at the market in January using a lot of different things, not so much based on the last week of December. We'll keep moving here. Want to take a look at the S&P 500 here, just to give you a quick look at where we stand now as the market. And this was as of about 9 minutes ago. So let me give you an update here. So right now we've got the S&P 500 down near the low of the day. It is flat. So the SPX up 1 point. If we go into the intraday, though, you'll see that we did show some strength early, came back down. We've been trading mostly in higher territory this morning. But right now, as we've now moved into the afternoon session, you can see that we are seeing a little bit more weakness currently with the S&P now actually down fractionally. I'll use the same thing, though. We'll take a look at the NASDAQ 100, look at the same 5-day, 10-minute chart. You can see, again, some sellings come in. We're flat on the NDX. If you want to look at the Dow Jones, we just turned a little bit negative there. And the IWM, which has been the leader today, has dropped quite a bit here in just the last 10 minutes or so, with gains still at about 0.5%. So we're at least starting the year in a little bit of positive territory. We'll see whether or not this holds. We've had a little bit of back and forth this morning, a little bit of choppy action. Tesla came out this morning and reported that their annual revenues declined. The market acted like it was really surprised by this, but we knew through the first 11 months that there was pretty good chance that their annual sales were going to decline. So again, I think the media may be taking advantage of the headline here, and maybe market makers as well, with Tesla actually showing lower prices at the very open today. We've been holding above it, but mostly trading sideways, with Tesla now back down below 380. There was a pretty good support level at about 410. I think that was the prior closing high in the history of Tesla before just recently going up through that level. So the fact that it is down, that's a little bit of a problem. Let me pull up that daily chart here. And you can see we kind of had a breakout, a little bit of congestion, probably from about 350 to maybe around 360. And then the 50-day moving average coming up at 350 as well. So with us now trading down below that 20-day moving average, seems to me like Tesla's heading for that level. We'll see. All right, this weekend, Saturday, in just 2 days, we've got our Market Vision 2025 event. This, in my opinion, is our biggest event of the year. Got a lot of history doing these. We've done 5 in the past. This is our 6th one. Last 5 times, I've given my forecast. 4 times I thought the market was going to go up. 4 times the market went up. One time in 2022, I saw a lot of warning signs, thought maybe we would see a 20 to 25% decline. What did we do? We ended up going down 28%. So I'm going to give you my take on Saturday, what I see for 2025, give you all my reasons. You're more than welcome to disagree with me. I always throw that out there. It's just my opinion. But I'll go through all the different signals that tell me why I think the market's either going to be up or down in 2025 and by how much. So in the past, I've nailed probably 3 of the last 5 years, almost right on the money in terms of these predictions. It's a little bit of a guess, but obviously there's some thought behind it. There's a lot of perspective that I use. Obviously relative strength, but it's putting everything together. It's all the technicals. It's the sentiment, and of course that big, wide perspective. I think you've got to, really look at the market from using a wide lens and not just get focused on what happened last week or what happened last month. Much bigger picture, I think, makes it easier to make those calls. But anyway, that's going to happen on Saturday. So if you go over to earningsbeats.com, you will be able to scroll down. You will see, you're not going to be able to miss it, Market Vision 2025. If you click on that, it will bring up Market Vision 2025, the year of diverging returns. There's the date, Saturday, January 4th. We'll start at 10 a.m. Eastern. Probably going to last about 4 hours, but we have it recorded. So if you are registered, you can look at it at any time. It'll be time-stamped throughout, so you can go back and look at whatever you want at whatever time you want. Want to definitely mention anyone who registers. There is a cost to registration. Anyone who registers, though, will receive a free annual membership to EarningsBeats with that registration. So make sure that you are registering. Now, I'm sorry to all of our current members. That applies to folks that are coming in new to EarningsBeats. We're pretty generous, but we're not just going to give away a free year of membership to all of our current members. So, and by the way, current annual members are already registered anyway, so there's no need to register there. But I've got some bold calls I'm going to be making, and I've made some pretty bold calls. If you've been to these in the past, I don't sugarcoat anything. Dave Keller is going to be joining me, as you can see. We'll talk about different things. You can go through and look at this. Here's the prior calls that I've made. Make sure you scroll through, check that out. And then you will see the live event itself. You can register. You can see all the things you get. Anyway, let's go ahead and do this slide. For those of you that are on a mobile device and you want to register using your mobile device, we've got a slide up on your screen. You'll see a QR code. That will enable you to scan that QR code using your mobile device, go right into the landing page to register and to review what we're going to be discussing and some of the things about the event. So anyway, check that out. Trying to make it as easy as possible for you to register and join us. So let's get back to the S&P. I'm going to give you a little snippet of something that I look at. So maybe just a little bit of a preview of what is coming on Saturday. A lot of folks think, we had a rough December in many areas, and that's going to lead into a bear market in 2025. Possibly. But what I will say right now is that this chart, which shows a lot of relative charts, a lot of my intermarket relationships that I like to follow, if you look back at the end of 2021 and early 2022, you will see the S&P 500 moving up and posting a final all-time high close oh, I think it was on January 3rd of 2022. Look at what all of these sustainability ratios were doing. As the S&P 500 was moving higher, the QQQ versus the SPY, that's the more growth-oriented ETF, which tracks the NASDAQ 100, versus the less growth-oriented S&P 500, or SPDR, that tracks the S&P 500. So that was starting to roll over just as we were setting this all-time high. Also, discretionary versus staples, another kind of aggressive versus defensive look at the market, was coming down, even though the market was going up. How about the large cap growth versus large cap value? Coming down. How about mid cap growth versus mid cap value? Coming down. Small cap growth versus small cap value? Coming down. Now, you might also look at it now and say, well, yeah, but here you can see all of these ratios coming down as well. Well, I'll just tell you right now, that's normal. The stock market's coming down. The difference was this came back during a period where the market was setting a new high, but it wasn't being led by many of the growth areas. Wall Street was completely revamping its holdings during this period back at the end of 2021, November, and especially in December. If you recall, in December of 2021, staple stocks gained 10%, while consumer discretionary stocks were flat. That is almost unheard of. In fact, I've never seen a month like that, when we're going to a new high in the S&P 500 and money is pouring into staple stocks, and consumer discretionary stocks are not going for the ride, along for the ride. We had negative divergences. We had the most bullish sentiment in history. We had a 22-month period where the S&P 500 had gone up 115% in less than 2 years. All of that is what we were looking at in early January 2022. It's not the same right now. Anyway, I'll talk more about that on Saturday, but wanted to just give you a little look. It's not about the S&P 500. It's not about just randomly saying we're going to go up or down. A lot of people are bearish and always want to say when the market starts to sell off, this is it. We're going to give you a lot more information to at least think about before you make those types of decisions. Anyway, one more thing on seasonality. I mentioned that we just sent out our seasonality report to our members. January is a month for communication services. Communication services loves the month of January. And if we put it up here versus the S&P 500, you can see that January has outperformed the last 5 years in terms of communication services, outperforming the S&P 500. And look at them, I'm going back 10 years, 11 years, 12 years. So since 2013, communication services has outperformed the S&P 500 every single year in the month of January. So just want you to be aware that is the best area of the market. Now, listen, it's not a guarantee. We just saw in December, I pointed out a month ago, real estate loved the month of December, and real estate was horrible in December. It's a tendency. It's not a guarantee, but this is pretty strong relative strength that I would at least be considering at this point. So I did this, one of the key areas of communication services. Let's look at the internet group over the same 12 years. It's gone up 11 of the last 12 years in the month of January. Pretty strong. And it's outperformed the S&P 500. If we just zero in there a little bit, it's outperformed the S&P 500 by an average of 3.7 percentage points per year. Not over the 12 years, per year. That's the average. So there are some months, there are some Januaries in our past where we've seen massive outperformance. So that means stocks like Meta and Google, two of the Mag 7 stocks, might want to at least be paying attention to them. All right, a couple more things we're going to go through real quick here. First, Apple, give you the Mag 7. This is a 2-year chart. Just want to kind of show you, give you a quick update going into 2025. I still see an uptrend in Apple. I see the AD line going up, setting a new all-time high. I think Apple looks pretty good here. Microsoft, Same thing. Look at the AD line hanging up, even though we've seen prices come down. Microsoft not having a good day today to open the new year. I think probably support's going to hold. And even if we move down, I think this 380 to 390 level looks really strong to me on Microsoft. So I would take advantage of weakness in Microsoft as we move forward here. NVIDIA. NVIDIA has been struggling here a little bit. Hanging in there today, though. Currently up right now 1.4%, $1.88, trading at 136. I think we're going to see another breakout of NVIDIA this year. I would not be surprised to at least go back up and test that 150, 155 area. But I believe probably there's going to be more in the tank later in 2025 for NVIDIA. Then we've got, take a look at Amazon. Down below the 20-day, struggling a little bit, down 30 cents. Tesla, as I showed you earlier, having a rough day today, currently at 375. That's down 7%. Big down day. Watch that 340 to 360 area, though, on Tesla. We got the 50-day moving average coming in at right around that 350 level. Last two, Meta and Google. So these are two internet stocks. Meta was up earlier quite a bit. We got as high as 604, which at that point was up almost $20. Now it's sitting at 590, up or $5.41, which is up about 1%. Google is down $1.48. It was up earlier, but it is pulling back. But these are two areas that if internet does what it typically does in the month of January, along with communication services, I would expect those two stocks to do well. Finally, just for the fun of it, I wanted to show you a stock. I own this stock. And I wanted to show it because this is a stock I think could be a big winner in 2025. I've already passed it along. I talked about it probably a month ago. It had a really rough December along with energy, or not so much energy, but with small caps. I think this is a stock that could do really well. It's called Cactus. It's in the energy space. It's about a $4 billion market cap company. If you're trying to, find a stock that might triple or quadruple, one of the Mag 7 probably not going to do it because many of those stocks already have a market cap at 3 trillion or more. Are they going to become 9 to 12 trillion dollar companies this year? I don't think so. It's kind of hard to grow at that rate when you're that big. But small company like WHD going from 4 billion to 12 billion, maybe. What I see, though, is, first of all, the AD line just over the last 6 months or so absolutely exploded from a multi-year low to a multi-year high. So we're seeing a lot of money coming in as it broke to new highs. Now, we just recently pulled back. We got a triple bottom. We're starting to turn back to the upside. I think this is a stock that could break out and potentially make a big run in 2025. We'll see. Maybe I'm right. Maybe I'm wrong. It's just one stock. But just for fun, let's see how WHD does in 2025. All right, that's what I've got for you today. Again, it's always a pleasure, joining you all for these. I really enjoy just teaching some of the things I've learned over the years. So I hope you enjoy it. For those who always want to try and rip apart some of the things I talk about, that's fine too. That's part of, what we kind of do to ourselves by getting on YouTube and coming up with our own predictions and so forth. But it's still a lot of fun for me. This is my passion outside of family and golf. Stock markets, another probably one of the big three for me. So I do want to wish everybody a happy new year, though, in 2025. Hope everyone has a healthy and prosperous new year. And hopefully at the end of 2025, we can kind of sit back and talk about another great year in the market, whatever that means. But I'll talk more about that on Saturday, so come join me. Anyway, have a great year and happy trading, everybody.